Welcome back to Mostly Growth, the #1 podcast for product monetization. And guys, we got a lot of snow in the Northeast. Not that you had to worry about that, Ben, but CJ, how much snow did you get?
It's over the heads of my small children, so that should tell you enough. But enough that I had to hire somebody to shovel it for me because, I had plans that day.
Yeah, I think there's currently more than 18 inches of snow outside. We did hire someone, but they have not shown up yet. So it's a little bit awkward to take my dog out. He's not even as high as the snow is. So I had to shovel a little path for him to quickly pee. When we talked about this big snowstorm, a little birdie told me that you hired a kid that has the smartest pricing model out there. Can you tell us about this?
Cooper. Shout out to Cooper. He should have a pricing podcast, not us, Kyle. Basically, what this guy does is he has a base price to shovel your house, but then he tacks on another increment of call it $50 for every 6 inches that it snows. So it was $50 to start for my driveway, but we got 18 inches, call it that. So it ended up being $150.
I love that. It's like you locked in a minimum, but then he could just keep making more and more and more depending on how much it snows. You've already pre-committed.
Yeah, and he protected his downside case. He lines up all the people ahead of time, and he says, I will come when it stops snowing, which is also smart, so you don't have to rework it, right? But that's also my bugaboo with this model. So right before this podcast, I went outside. It's now been over 24 hours since it snowed. And like you, it hadn't been shoveled yet. It has definitely stopped snowing, but he hadn't done it yet. So I had to go out there and shovel part of it, freeze my ass off. But regardless, it's a smart pricing model. He's built up quite the client list, and he's checking the weather reports as it happens. And I don't think he's automated this, but he sends out the reminder emails to people that snow is going to come. And so we joked about it, Kyle, about the outbound Pizza Hut, hey, what would go great this Friday? Like a large pepperoni pizza. He did that to us because he'd come last time around, and my wife got the text oh shit, it is going to snow. CJ, do you want me to get this for us? I'm like, absolutely, lock it in. He's got the outbound model working. He's got the messaging working. He's got the pricing model dialed in. Now he just needs to show up on time to shovel it.
Dude doesn't even need to go to college. I mean, he's just got a business model figured out. This actually kind of also reminds me of the investment banking model where if they sell your company, it's like, oh, we're going to take X% of the transaction if we sell for this price, Y% if we sell for this price, Z% if we sell for this price. Meanwhile, they have better data than you do about transaction comps and what they think the business can sell for.
And he was definitely checking the weather reports closer than I was. So what I am curious about next snowstorm, if it's still the same base fee, or if he signs people up and he changes the increment, over 6 inches, it's $100 more. Over 12 inches, it's $200 more, something like that. Not that I'm going to give him this information so he can price me out.
We'll have to see the receipts.
From Mostly Media, it's Mostly Growth. Go-to-market strategist Kyle Poyar and CFO CJ Gustafson break down how modern companies make money, covering pricing, monetization, and benchmarks in ways that make you better at your job. Tactics and playbooks for finance, product, and sales operators looking to be the CEO of their role. This is Mostly Growth.
Well, speaking of pricing models and pricing in the real world, today we wanted to go through different pricing models that exist that you need to know about. We talk a lot about in software about things like, should you charge per seat on a usage basis, outcome basis? Meanwhile, there's just so many interesting pricing strategies out there that are super applicable to how we grow, but just get totally overlooked. And so you guys game to talk about this today?
I'm super pumped for this.
All right. First one I had in mind was the razor blade pricing model. Do you guys get that razor from Gillette? I think when you turn 18, they send you it.
Yeah, I got that in the mail. I remember that.
It's like the welcome to your first real shave, and they give you a little booklet about other adult milestones. The model with razor blade is that if you have something that's like the razor, right, the Gillette razor, you buy that once. And then once you have that, you have to buy the razor blade to keep filling it up. And so in razor blade pricing, you want to actually commoditize the razor and go as cheap as you really can afford. And then you jack up the price of the razor blade because no one's really paying attention to the razor blade price when they buy the razor. And that's where all the margin is. And so I think Gillette's strategy was brilliant of literally commoditize it by giving it away for free once someone becomes an adult and might start paying for their own shaving stuff.
It reminds me of like an espresso machine. They'll give you the crack pipe for basically free so they can sell you the crack over time.
This is one of those models that is everywhere in the real world. It's like printers and printer cartridges.
The printer and printer cartridges one, like brother printers, you can get a printer like on Amazon for, it's crazy, like $200. And you're like, how could this thing possibly cost $200? But they want to get you on this subscription plan where they just keep sending you ink. And then in the back of my head, I'm like a downside case person. I'm like a credit analyst. I'm like, well, what happens if I have this presentation that I have to print out? It still gets me hooked because I don't want to be caught in that situation with my pants down and not have ink. So I sign up for the subscription plan. Now I have a whole cabinet full of this high margin ink.
I actually don't own a printer. I probably should.
You don't have a printer?
I don't want to own a printer. That's the thing. I really don't want to own a printer, but it's very hard to run your own business without a printer.
How many tax forms have you had to sign in like wet ink though?
I've been cheating a little bit. So I use a combination of Adobe eSign, and then I will also have my husband print things out and then bring them to me.
The number of texts I get per week from Galen just saying, hey, can you print this?
I don't know how people that don't know how to use Photoshop start a business or do an S Corp or something like that without using Photoshop. Because yeah, I would have to print like a lot of things, sign them, and then put them back in. But no, I've just been Photoshopping all my documents.
The like iScanner app is one of the best apps on my phone. It does really look like I legit scanned something, even if I cheated.
Total tangent. Have you ever had to fax something and then realized you didn't have a fax machine, so then you paid like to use an app from the App Store to do it?
I have not done that. Who still only accepts fax?
A lot of old stodgy banks. So there were multiple times where I was setting up bank accounts for the companies I worked at in like other countries or some state tax registration stuff. You have to fax it in. Most of them have gone modern and you can email it now. There are some apps out there that I bet print money because it costs like one-time $2 fee or something to do the fax stuff. But it's like the small number of use cases where you still need a fax machine, but nobody has one.
My dad owned that car dealership I've talked about here. And sometimes like the fax machine would just start printing something. And that is like really jarring. It's just like something arrived. It's not like an email that's kind of in your inbox quietly. It's like, no, now all of a sudden this thing is on making noise.
Ray Dalio, who started Bridgewater, the now biggest hedge fund in the world, or one of them, he had a newsletter back in the day and it would get faxed out. And so people would get on his list to receive his newsletter via fax, Kyle.
Email, I think, works a little bit better. Well, all right, so razor blade pricing. Is this a thing in tech? Should this be a thing in tech? Are we going to make it happen?
What my mind went to was implementation services, just knowing that you can amortize that cost over the life of the product. You help them get their ERP in, and then they're probably not going to rip it out for 5 to 8 years. But now I'm trying to think of like an actual product that you use on an ongoing basis, and that's not where you make the margin, but it's still all software.
That is a good example, right? Where we used to actually charge a good amount for onboarding fees or implementation fees. Now almost everyone says, hey, reps can waive the price here, discount at 50%. Like we're fine losing some money on the onboarding because we know we can make a subscription fee for the SaaS.
I think a lot of them are probably still hardware software mixes. Like in the consumer world, the Peloton bike itself is actually pretty reasonably priced for how much metal and shit it is. But I just got one. It was a refurbished one. But what I didn't know, Kyle, is that I had to pay $50 a month on top of that just for access to use what I had just purchased.
There's more examples of like hardware plus software than people probably think. Like a Toast is a POS system, but then they've also got payments and online ordering. If I'm a Toast, maybe you don't want to give the hardware away for free because someone could maybe just take the POS and like never return it and you're out a huge cost. But like you kind of want to give it as cheap as possible because a restaurant that's just starting out that maybe needs a first POS system, they don't have a ton of money, right? So they're going to be much more price sensitive on the POS system itself. And you're maybe okay to sacrifice margin there and make money and a higher, subscription fee.
The razor and razor blade industry, though, it is just such a fascinating arc of where it's gone from like sending it to you in the mail, right? This is probably something that started in the 70s or something, to going into stores and buying it, to them like putting a physical lock on the wall. It's basically all gone direct to consumer over the last 10 years.
I hate that Target puts the razors in jail. Yeah, talk about going in like the opposite direction of not making them accessible. But yeah, I think a lot of people probably do the Dollar Shave Club or all of these direct-to-consumer brands nowadays.
Hey, thanks for listening. We'll be right back after a word from our sponsors. Here's a question. When was the last time you really had time to focus on growth and not chasing contract renewals, tracking shadow IT spend, or explaining rising software costs to the board? Yikes! The truth is, traditional spend management is broken. If you're still piecing together data from 5 different systems just to figure out what you're actually spending, while vendors keep on pushing those auto renewals and price hikes, my friend, I got a solution for you. That's where Tropic comes in. Tropic is an intelligent spend management solution that consolidates your spend data and processes into one unified offering, enabling insights and decisive action. It doesn't just show you where the problems are, it helps you solve them. From spotting hidden optimization opportunities like duplicative spend, to automating those painful procurement workflows, to giving you the best market data that turns every vendor negotiation in your favor. Tropic combines smart insights with real human expertise to keep you ahead of the curve. And I can say firsthand because I've used them for over 2 years. Their SaaS platform helps me with price checks. It helps me keep my calendar organized of when renewals are coming up and I can actually visualize it. And let me say, it saves me more than 10 hours a week on vendor management, and we've saved a ton on renewals. I'm walking into the boardroom with a lot more confidence. Isn't it time to turn your spend management into your competitive advantage? Visit tropicapp.io/mostlymetrics. That's tropicapp.io/mostlymetrics.
If you run go-to-market, you already know the problem. Your go-to-market data is everywhere. Ads, CRMs, sales calls, marketing, spreadsheets, but you're still guessing what to do next. HockeyStack is the AI platform for modern go-to-market teams that collects all your customer data and unifies it into a single system of action. Then you deploy AI agents that prospect the right accounts, help reps close and upsell deals, improve forecast accuracy, and automate what's already working across sales and marketing. Instead of running 5-year-old processes manually, your go-to-market team finally has agents that understand your ICP, your funnel, and your buying motion, and they execute on it. That's why teams like RingCentral, Outreach, ActiveCampaign, and even Fortune 100 companies rely on HockeyStack to cut through the noise, eliminate wasted spend, and make better go-to-market decisions faster. That's HockeyStack, the AI platform that helps go-to-market teams make space to think and win. Here's a growth tax nobody talks about. Every new monetization model you ship creates a nightmare for your finance team. Add usage-based pricing? Now you're tracking consumption against commitments. Launch product bundles? That's multiple performance obligations per contract. Offer mid-cycle upgrades? Woo! Good luck reallocating revenue manually. But that's exactly where RightRev shines. RightRev is the revenue recognition engine built for companies that can't afford to let accounting slow down growth. When your RevRec is automated, your product team can ship new pricing without asking finance for permission. And your sales team can close creative deals without worrying about downstream chaos. To get up on my CFO soapbox for a sec, I love talking about creative pricing models, hybrid pricing, credits, tiered usage. But I've seen too many companies where the sales team is celebrating a huge quarter while finance is still trying to figure out how to recognize half of it. In a world where your pricing model might change 3 times next year, that flexibility is everything. If you want to scale your monetization without breaking your books, visit RightRev.com. That's RightRev.com, where modern monetization meets bulletproof accounting.
Let's talk about Waitlist. Now, a lot of SaaS companies or just tech startups have a waitlist where they make it seem like the product's in preview. It's only for select people. Gmail back in the day, when I got my first Gmail, it was still a waitlist only product. And there was some like cachet to have a Gmail before other people had it. It actually runs it. Did you ever get your kids off the waitlist for that Play Center?
We did. We're now paying annual prepaid subscription members of The Wonder. Proud paying members. I have no idea how I got roped into paying for this. It's basically more than an Equinox membership for my kids to go and play on snowy or rainy days. But it's so smart because what they've done is they've constrained how many people they will let in. And what ends up happening is we're having pizza party on a Friday with our friends. We start talking to them like, oh, we're on the wait list at The Wonder. What they do in their minds, Kyle, is they say, oh shit, I better get on the wait list. They didn't even know they wanted to be members of The Wonder yet, but they know that their friends now are on the wait list and they get this FOMO of, well, wow, I don't want to be left out, so I'm going to join too. Then next thing you know, now they have another person.
Ponzi scheme. Yeah, there is something like psychological about the wait list that makes it more appealing than just even signing up for a product. The FOMO of it, like if I don't put my name down now, I'm never going to get this reservation. One challenge that I see startups face is like a product will go viral and the waitlist will end up getting like tens of thousands of people on it. But then they wait until the product is ready before they open it up. And then all of a sudden they email like 30,000 people being like, our product is live. Half the emails bounce. The other half go to spam because you've like never emailed these people before. And the waitlist does absolutely nothing. So one tip for tech companies with a waitlist is like regularly let people off that waitlist and ideally like increase that batch rate over time. You want to make it pretty fresh. If you still have a lot of emails on that waitlist, do an enrichment of those emails to make sure that you know that it's valid contact information before you do a big send.
I was doing some research on this because I knew we had it on the list. What product do you remember from call it like the last 10 years that had the most successful waitlist launch? I'll give you a hint. It's a financial trading product.
Robinhood? I don't know.
Yeah, Robinhood. That was probably the most successful waitlist launch that I remember, where they had just a simple landing page and it offered free trades. So that was back when E-Trade was huge, and I think it was like $6.95 a trade or $7 per trade. And so it was a huge deal for a brokerage firm to say all trades are free. Now, what they don't say on that landing page, of course, is that we're selling your data so people can front run your trades, but neither here nor there at work. Waitlists, I mean, waitlists have been around forever, though, if you think about it. I hate golf and I'm not a member of a country club, but like that is the standard example of a waitlist.
Once you get off that waitlist, you're also not going to churn off the product because you're like, I did so much work to even get into this country club. Can't leave now. One of the best examples I was thinking of with waitlist products was Superhuman. Back in the day, they actually did manual onboarding 101 for everyone that was starting with the product. It required changing your email behavior, getting comfortable with like an AI email assistant. There's a lot of work associated with that. And I think that they kind of thought, if we just let people sign up for this on their own, they're not going to know how to use it. They're not going to see the full value here. They're just going to churn really quickly, or they're just not going to trust us with their email. And something about the waitlist and then the one-to-one onboarding, I think just created a lot of great word of mouth. And they opened up their waitlist, I think, to like influential people first. And so there was also like a bragging right to say sent from Superhuman.
And there's a huge social dynamic in the back of all of this. Like you said before, for the country club, you have to get references. Now you don't want to look bad in front of your friend who quote unquote put their neck on the line to get you in. It's kind of like loss aversion. Like I put in all this work to get set up on something. Now I have actual skin in the game. I'm going to use it. Because when you were going through that at first, I'm like, that is not scalable at all. But then I thought, that's a great retention play in the long term.
I think even just for launching a new product, having a wait list, you can bring in that same tactic. But then I think like there's some other things where you could really constrain something. Like if your CEO is a great thought leader and expert around the subject that your product works on, you be, hey, we're having a special CEO-led boot camp. Only for the first 50 people are going to get access to this training from world's best expert. Here's a wait list to sign up. That kind of thing actually makes it feel more exclusive. And so I think for a lot of events, especially if you feel really good about the quality of the event, constraining the number of people that can attend, or at least saying that you're constraining it, makes it more interesting for people.
Kyle, I've heard of people who are starting newsletters and they create a sign up wait list to get on it. And they have no idea actually what they're going to write about yet. They're testing to see if there are enough people out there. I haven't done this before, but I've also heard about people doing this with products that they're going to create. They basically do this smoke test of saying, this is what I've built. It's going to come out in 6 months or whatever. Sign up if you want early access. They haven't even built the product yet. They're doing it just as a way to test if there's market demand. I don't think it's dishonest, but I think it's a sly way to test if it's there.
You know, it is great for like new products. I mean, I interviewed the CEO and founder of Jump Cloud, which was a former OpenView portfolio company. I interviewed him in Growth Unhinged, and they had, I think, 4 different like landing pages with different ebooks about like different messages about what their product could do. And they put some paid behind each of them. And we're just like, hey, what are people actually converting on? Let's go build the thing and the value prop where we know that we can spend money and like get an audience that's interested in this.
The ultimate worst example of a wait list, though, is when you have to prepay for a feature that isn't built yet. And that's like the Tesla, like completely autonomous driving. So there have been so many complaints that I paid for this like 3 years ago and it's still not a thing.
Let's figure out another pricing model. I think let's go with the free sample, shall we? Obvious applicability with tech because of like freemium and free trial products. But when I think of free samples, I think of Costco. Like you can't not think of Costco, right?
I think of Ben going to Costco.
I'm a big Costco guy.
What is your go-to free sample there, Ben?
Dude, I have a bad answer because I am such a good Costco shopper that I don't go at the time when they have the free samples because I'm going at the exclusive executive hours in the morning.
Wait, that's a thing?
Oh, yeah. If you have the executive tier, which is like, I don't know, an extra $100 or something a year, they have an hour every day where it's just the executive people. So me and the other bourgeoisie are just yucking it up.
This is like another even pricing example. The executive tier. I love that.
And it's so worth it.
Congrats, you get to wake up early.
The parking is better. Like there's no line to get into the store.
So I was talking to Sarah, who has 3 young kids. She does all the scheduling operations and keeps the trains running on time for the podcast. And she was saying, when I take my kids to like Whole Foods, Shaw's, it's an absolute shit show. Like I can't keep track of them. They're running all over the place. I love bringing my kids to Costco because of the free samples. They all want to get a free sample. So they're always like, where's the next like giveaway of like candy or hot dog or something? She said they're so well behaved and they follow me the whole time.
That's awesome. I also have to say, like, I do buy stuff from a free sample, or I get very close to buying things and chicken out. But most recently, Whole Foods had this like smoked whitefish spread that they just put on a cracker. I was like, this is kind of delicious. Am I a smoked whitefish kind of a guy these days? I never buy fish. I would have never bought that without a free sample.
10 times out of 10, I would have said you were a smoked white fish on cracker, caviar kind of guy.
I don't know how to take that. I think poorly. So for tech products, like the obvious example is like freemium and free trials. These increase the acquisition of your product. But I think like more than that, what I'm seeing these days are one is an ungated experience of the product where you start using the product when you just land on someone's website before you sign up. So if you've ever done a vibe coding product like a Lovable, a Replit, a Bolt, you just land on their website and it's like, what do you want to build? Start typing in a prompt or click something, and then you see it start to build that thing. And then if you actually want to do anything else, that's when you have to create an account. I'm sure they convert so much more of their traffic than if they were to be like, hey, create an account here. What's the password? How are you going to use this? And ask like 10 different questions before you can try it out. Just putting it on the website and say, here it is. Do you want us to build you something? I think is just so great for driving additional acquisition.
And just to piggyback on that, once they are a paid customer and they're in the product, there's a way to use free trials again to get them to go to the next tier or to buy an add-on module. So I know you work with Beehive. We both have our newsletters there. They just started putting this AI chat feature in, and the formatting on it, like it's incredibly flexible, which is great, but it's also incredibly flexible, which can be bad. So you can actually type in and they give you like, call it X number of credits to say, change the header to blue and Georgia font 16. And you're like, holy shit, it just did it for me. And if you want, you can pay more to get more credits. Now, I'm already in the product. I'm already a paid user, but they're using an ungated, try this thing without any restrictions. And if you want, you can pay us even more.
The free token is the free sample of the AI world. Next model up here is kind of the opposite of free. Talking about luxury products.
This one grinds my gears, man.
Costco.
You could buy lobster and stuff at Costco, right? Like a shit ton of lobster, probably.
And I'm getting it earlier than you guys.
My wife is recently into purses. And have you heard of a Birkin before?
Those are not cheap.
She doesn't have one yet. She's been talking about this mystical creature, which I've looked them up online. Like, I'm not going to lie. It looks pretty ugly in just like a box. They all seem to be bad colors to me. I don't fully get it, but that's not the point. Have you heard about like how you get access to be allowed to buy one, Kyle?
Yeah, it's like a whole thing. And I think that a lot of these like increase in value over time, like some of the vintages.
But for the benefit of listeners, Kyle, you have to start out buying like all the products that nobody else wants from Hermes. So maybe you have to buy like this scarf that's like out of style. Then you level up to like this nice keychain, or I'm just making stuff up now. Then you get like a pair of shoes, but eventually you get to have a relationship with the rep for the right to purchase one and come off a wait list. So it's combining these two things at once. And once you get to that point, like they don't haggle on price. The price is what it is. And if you don't buy it, you lose your spot in line and you probably don't get onto the list again.
I just can't hear this without thinking of Julia Roberts in Pretty Woman. Big mistake. Huge.
Big mistake. big, huge.
So what's fascinating about it, like Hermes will do things like what you talked about, but in general, many of these products are essentially like, they're called Veblen goods, I believe is the economics term for it. But price elasticity is close to zero. And in some cases, when you increase price, demand actually increases because it's seen as more exclusive, more premium. If you're a billionaire and you're looking at a luxury bag, and then you find that there's one that everyone else has that's like, going after the mass market consumer in the suburbs, you're like, this doesn't feel exclusive anymore, right? And so you're actually not going to buy it because it feels like too accessible for everyone else.
It's funny, I've gotten into watches lately. I like history, I like craftsmanship, and so I've been researching the types of watches that are out there. And everybody dumps all over Hublot, or Hublot, as they say it. And the reason is they think it's basically just like trying to take advantage of the luxury market without actually like making all the mechanics inside the watch. So like taking credit for being a luxury product without putting the craftsmanship into it. And one guy, like how he broke it down was he took every piece out and then figured out where it was made because they don't make all of their own stuff. Some of it's outsourced. And he added up how much it would cost to take all these parts and put it together. And let's say it's a $30,000 watch. He was like, I could make this, and hopefully they don't sue us, ballpark like $750. And he said the point of buying this watch is to signal to someone that you have so much money, knowing what the quality is, that you bought this just to make a statement. Right? There's something funny about luxury goods with just like the act of spending to show people that you're spending.
I can't believe you bought this when it's such low quality. And people are like, yeah, we bought it because it's low quality. What, you think I have something that actually involved craftsmanship?
It's a similar trend with streetwear, which like GOAT, StockX, let's say you buy like a Bathing Ape shirt, or you buy sneakers that look like they're all scuffed up and stuff. The signal you're trying to say to people, what was once considered to look prestigious, that I'm actually going like down market, and that's what's cool now. I don't even care about looking good.
Yeah, I think a lot of people are even calling this like quiet luxury, where it's not overly flashy. It doesn't look expensive in a way that like it's not full of like crystals or diamonds. Like it doesn't look showy. The whole point is that if you're a discerning consumer, you'd spot that it's luxury, but an everyday person would actually have no idea.
I saw this magazine article and it was breaking down what the people on Succession were wearing, and it pointed out Kendall's hat. And it's just a gray hat. It's a gray wool hat, has no logo on it. You could probably buy it anywhere. And like, this is a $2,000 hat.
I hate that so much. But all right, so let's talk about the tech equivalent of that. There's not that many luxury tech products out there, I'll have to say. I don't think it like has the most applicability. But I will say, like, there are some products where I certainly think this applies. Even like for my own newsletter, I've got the core subscription is $15 a month or $150 a year. But I have a founding member tier that's $300 a year. And the main benefit of that is like I will chat with people, or essentially people will have access to ask me one-off questions. And the other thing is like people are just supporting me as an author, as an entrepreneur. Like a surprising number of people actually buy that tier, even though functionally the benefits are very similar to the core subscription. But I think it's nice to just have that offering, and some people seem to be open to buying it.
My example is somewhat similar. So there are a lot of like thought leaders online who now monetize consulting hours. And it seems like the higher they raise these prices on, like, it's no longer $500 an hour, it's $2,000 an hour. People are like, oh, wow, there must be so much insight for it to be 4 times as much that I actually want to pay more to have an hour with that person.
Yeah, one thing I tell some companies with professional services, there's a lot of companies that just like default give it away and they like bend over backwards for their customers. But one of the things that I encourage folks to do is like put a price tag on services, even if you discount it or give it away for free to win a deal. Having a price forces you to talk about the quality and essentially be like, here's what you get for this. It's X amount of hours, or it's here are the profiles of people delivering it. Like, I really believe that if you just say something is free or included for everyone, it's immediately discounted as kind of worthless and shitty. And so there's something about even assigning a high price to it that like just forces you to get way better at product marketing around it.
Or just any price. So I was talking to Bruno Annicq, the CFO of WellHub, formerly GymPass, and what he said is they include access to gyms in company health plans, but it has a much better uptake rate and success rate and retention and renewal rate if, say, the employer, I'm making it up, pays $5 a month for it and the employee pays $2 isn't a lot, but it forces them to have skin in the game. So I totally agree with you that like you should put a price on it, even if you could in your business model afford to give it away for free.
One that I find it fun, but I don't see that often in the real world, is the decoy effect. Have you heard of this?
I haven't. Break it down for me.
So there's a classic Economist example. I think this is in like Predictably Irrational, the book. I can't validate it other than reading about it in this book. But the idea was this was back before we had mobile apps. There was a print version of The Economist and an online version of The Economist. And I believe it was like online was like $59 per year or whatever. Print was $125 per year. And then print plus online was $125 per year. So it was the same price to buy print only or print plus online. The print only was effectively the decoy. Like it was there to make print plus online look like this was like this amazing savings. This was a time when a lot more people were buying online stuff instead of just print. The Economist makes way more money if you buy print because of the ads that are in it. So they want to have an online only offering, but they want to make print look more attractive. And so having this decoy effect, people all of a sudden think they're getting a deal if they're buying print plus online. But I always thought that was a cool example.
Is this kind of like what they do with the landline and Wi-Fi, where the Wi-Fi on its own is more expensive than buying the Wi-Fi plus access to a landline? And then you're like, what am I going to do with this landline?
Essentially, I mean, in this case, like the two products do have standalone value. Like the bundle feels like you're getting more for it. Like it's not like the bundle's cheaper than print only, but it is kind of similar.
You kind of put my brain in a pretzel there because I was like, that costs a lot more to produce a piece of paper. You'd think they'd actually want to steer people to the digital version so their cost of goods sold goes down. What I think you were saying, Kyle, is that the ad revenue they make on the paper is so much more because the surface area is larger.
In my personal experience, for most magazines, you're looking at like 80% of the revenue historically was from advertising and 20% from readers. Now, obviously, it varies a lot. There's probably some publications where it's closer to 50-50 or maybe even mostly reader supported. But I have to imagine The Economist is a very high value audience and those ad slots are probably quite expensive. Ad slots alone would cover the cost of printing the magazine. The goal there is like have the circulation in print because the print ads are worth way more than an online ad.
This is a good example.
I think the equivalent in SaaS or in AI products or elsewhere would be like for add-ons, you sell them separately, but then you sort of like bundle in the add-on for like no extra cost in the package. People are like, wow, I'm getting so much more value. I might as well like buy this package.
Yeah, I've seen that a couple of times, especially with all the note-taking apps that want to add in something with AI on top of it. You're like, I'll cave and just get that for the whole team.
It's like, nope, you didn't actually save anything. So let's shift gears. Another model that I find fascinating is called a two-part tariff. Have you heard of this?
Are we raising them again? Tariffs are here. Tariffs are not here.
Only on you, CJ. So this is like the Amazon Prime effect. So people pay once for something and then they pay again for the consumable. Kind of actually like the razor blade product, only in this case, the first thing that you're buying just gives you discounted access to the second thing. So you're not really like buying a physical product, you're buying an ability to buy.
Isn't this like the Costco membership then?
Yeah, very similar to Costco. It's like the Amazon Prime, like you pay $100, $150 for Prime, then you get free 2-day shipping on everything. Or now it's 1-day shipping. So you save money on every purchase. And the psychology here is that once you lock someone into an ecosystem by like paying for the membership, they are so much more brand loyal and just buy so much more stuff. Like for me, when I was paying for shipping on Amazon, you're like very cautious about what you're buying. You're like, oh, let's wait and have an order where we have everything we want to buy on Amazon all together. But when you have free shipping, you're like, oh, I need something now. Let me just pull it up on my phone. All right, buy. It's just like a default. I go to Amazon for everything nowadays.
Kyle, when you were commuting to the office, did you ever buy the Uber or the Lyft subscription to get discounted rides?
I did at one point. They made it so cheap. They charged like $3 a ride.
Yeah.
Once you bought the subscription, it was like, this is as cheap as taking the tea.
My CFO brain goes to, okay, so I'm giving them somewhat of a discount, but I can take whatever the subscription was, spread it out over however many purchases. And after, say, 5 discounted purchases after that, it's basically margin because they're buying more and more things. But like if you go too low, I'm like, okay, you got their loyalty, but you're actually now selling a negative gross margin product as a result.
I don't think you ever want to go negative gross margin, but I think the idea is the first fee that someone pays is like a sunk cost. So once someone's paid for it, they kind of forget about it. It goes to the back of their mind, and it locks them into that ecosystem where like now that's like, all right, I've already paid for it. I might as well get my money out of what I did. But you end up having some people that end up like never using it. It's like buying a gym membership and never going to the gym. So for those people, you got way more money than you would have otherwise and more profit margin because they just spent money on something they didn't use. You got other people that use the product more, but they paid a one-time fee in the beginning. So the savings and with the initial price kind of like work out. But I think that, where this could go wrong is people maybe triple or quadruple their consumption, and you've made the consumption like negative or flat margin, and then you've just kind of given away your product.
Well, for Amazon, there's no way that they're able to pay for all the shipping costs and the infrastructure for my family for the $100, whatever we pay per year. Maybe it's $150 now. So at some point, it's like you've created a very, very loyal customer who's addicted to this. I guess it's a great problem to have.
Super smart of Amazon. I think they also realized that the more people that they have in their network buying stuff on Amazon, the easier it is to offer 2-day shipping without losing a ton of money on it. So I'm sure like these AI companies, it's kind of the same thing. Like they actually need people to use the product to train the models. And as they train the models, they can probably make the compute and the inference costs more efficient.
Well, you're the pricing expert, Kyle. Just like rough numbers here. How compelling of a discounted offer should people be thinking they have to give on their core product after you do the first part of the tariff?
I think you got to be anywhere between 25 and 50% off. Like it has to be pretty meaningful so that people are really saving a lot of money every time they buy the thing. Otherwise, the consumption is not going to increase that much.
That's what I was going to say. If you're offering me 10 or 15% off, it's like get out of town.
Yeah, but 50%, you're like, oh, yeah, of course. I have one more pricing model that we should talk about. And this is a favorite one of mine. So it's price anchoring. This is when you have essentially like a really expensive plan in the mix so that people like compromise and they buy the middle thing, but they avoid the cheapest option. So if you have like a $5 a month plan, a $9 a month plan, and a $49 a month plan, all of a sudden you're like, oh, well, like that $5 a month thing is kind of cheap, but like I'm definitely not paying $50. And so $9 actually just feels much more reasonable.
I did this with my family's healthcare like 2 weeks ago, Kyle. I'm like, that would be really irresponsible for me to get that one on the left. And I mean, like, we're not going to get that sick. The one on the, I'm not paying that much per month. I'm like, you know what? That one in the middle, that looks like the good option.
For whatever reason, having the higher price plan, you just like drive a lot more people to the middle. I've done this before with products where like initially it maybe had like, there was a premium and a premium plus tier, right? And you'd get maybe like 60% by the basic and like 40% by the plus or something like that. All of a sudden, when you add a more expensive tier to the mix, it flips and like more people actually buy the middle tier than any other tier. And that's all of a sudden the most popular plan. Like there is something about that just like someone looks at a pricing page and they're like, oh, this is the recommended thing. It's the middle tier. They've got a lot of check boxes. The price is reasonable. Let me go with this.
Can we do one more? Kyle, I want to get your thoughts on Amazon Prime Day because I have a theory, and Ben can pull up the meme from Braveheart here, that everybody talks themselves into thinking that they're getting a discount, but there's some gamemanship that goes on the other end where they're actually raising the prices in the month or so leading up to it and then lowering it back down to the price that it was at the other 11 months of the year.
Oh, absolutely. If there's ever a good time to raise prices on something or like raise the list price, it's right before you're up to discount something.
Because I've always thought that SaaS companies should raise their list prices like in Q3. And that way the discount that they're giving away, the effective total discount they're giving away in Q4 isn't nearly as bad to them.
Not a bad call. I think a lot of price increases currently happen on like January 1st as like starting for the next year, but then their price increase is going into a market when they've just discounted the hell out of their product and demand is starting to be lower because everyone bought in Q4. They've just sold a bunch of stuff. And so now it's kind of a double whammy that like demand is lower and they're raising prices.
You've drained the swamp, you've used all your pipeline up, and now you're also having a higher starting bid that you have to put in to even get onto the product.
Raising prices in Q3 to then discount in Q4. We're going to start seeing a bunch of price increases in September.
Is there a best month to do a price increase from what you've looked at?
I don't think I've found an exact time to do it. To me, the best time is usually around the time when you've just launched a feature. You basically can be able to credibly tell customers, we are raising prices, but you're getting a lot more for what you're paying for.
So it's event driven. It's not calendar driven.
That's how I tend to like to do them.
All right, you guys. What sort of reliable things do you have for me this week?
All right. So I don't know if you saw, 2 jailbirds just got out of the clink, Kyle. So Caroline Ellison, who's working with Sam Bankman-Fried at FTX, she was running Almeida, the kind of like scam hedge fund. And then CZ of Binance is also out of jail. My question for you, Kyle, in a year, will either of these people be A, managing money, which I think is illegal for them to do, or B, have credible venture capital money backing them?
I mean, we saw the WeWork guy.
But he wasn't a criminal, right? Was he?
I guess probably not. Just did some like ethically ambiguous stuff. The odds are good they'll end up with some sort of funding. I mean, hey, all that matters is distribution these days, right? And these are people that have a following. That's so dark. I really don't want that to be true, but I think it is true.
CZ was at Davos for some reason. He was being interviewed by Andrew Ross Sorkin, who's like the best, Financial Times type interviewer. And he was like, what was it like in jail or something? And like, he just went into like way too much detail of like how horrible it was. And I think it was like a live broadcast. This is like my business plan. He's like, oh, wow, that sounds really terrible. What happened there?
My first roommate is a double murderer. But he's been there for like 12 years. He still have 18 years to go.
You probably shouldn't have done that stuff in the first place then, huh? Oh man, no Martha Stewart jail.
No, this one did not sound like Camp Cupcake.
Mostly Growth is a Mostly Media production. Executive produced by Ben Hillman. That's me. Additional production by Steve Sarasoli. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of CJ, Kyle, and Ben. Just some guys who love talking growth. Mostly. If you like this podcast, hit subscribe and give it 5 stars. It'll only take like 2 seconds and our algorithm overlords love it. Drink water, call your mom, and have a good day.